Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And for those of us that are Meta shareholders, it was an interesting week. We got some earnings report, which is always nice to see how the company's doing. But the stock didn't really love it. We're going to talk about why that might be and what it predicts for next year. Get to
Two Super Guys Trade Stocks.
it. All right, man. Told you. First of all right. Mildly humble brag here. All right. We published this video right here, October 31st, 2022. All right. It's our second most viewed video, I think, ever at 19,000 views. All right.
Oh,
What
shit.
has
I didn't realize
Yeah.
that. I didn't have
What has
checked.
Meta stock done since then? That's the real question. Oh, right, look at that. 219%. Okay.
This is probably one of my biggest regrets. It's because I had a limit order at, I believe it was like $2 below the low. I think it hit like 86 or something. I
Yeah.
was gonna buy like 100 shares at 84, and it didn't go off. So, I'm a greedy idiot.
Oh, but don't worry. I made a stupid decision about this one on this way along too. So I built out my position to 100 shares. I think my last purchase was like right around 90 per share. And I was selling covered calls. Of course, this moved so aggressively. It ran right through my strike price of my covered call. And I ended up selling, for a gain. I want to say I would have been 130 a share on the first block. I bought back in, smaller position though, because obviously the share price appreciated a lot. So I still own, I forget exactly how many shares, but nowhere near the 100 I had at one point in time, which is unfortunate.
I'm only like
But
10 or something. It's very upsetting.
yeah, such is life, unfortunately. So Meta shares did not respond very well to this earnings report, down 4% over the last 5 days. The real question is, why did that happen? Now, if we go into the actual earnings report here, there's some really sexy numbers. Did you look at this or read any coverage of this at all, or not really?
No, you're my coverage. You
I love it.
said you're gonna look at this. I was like, no, I don't have to now.
Perfect. So 23% top line growth.
Okay.
23%.
That's stupid.
Yeah. And then right below here, look at that. See that little bracketed number in parentheses, 7%? Their costs went down 7% while revenue went up 23%.
What? Okay. That sounds great.
Yeah. So you remember when Zuck talked about the year of efficiency? That right there says, God damn, did we deliver? And when you have a company that's as large as Meta delivering that kind of level of growth and efficiency on their cost cuttings, look at the what happened to profit, income from operations, 143% improvement in a year compared to last year.
Yeah. I mean, that's disgusting.
And because of the fact that they have like $37 billion in authorized buybacks, of which they executed 3.7 billion in this current term, and they've been buying back shares, the EPS is even a bigger number. Rather than 143%, their EPS was up 168% year over year.
I'm waiting for the bad news here because this all looks fantastic.
It'll come. It'll come.
You would not think this company has a 750 billion market cap with those numbers. That does not make sense.
Yeah, this is like those kind of growth rates are some like BS little Kathy Woods tech startup company kind of growth rates.
Yeah,
and you're seeing this from one of the largest companies like in the stock market. This is reiterating prior points. The only kind of other point I can take from this is, do you remember there was all this talk about when the Meta stock was doing poorly about how it's dead, no one's using that platform anymore, just garbage. Look at the actual user numbers here. 7% year over year, 7% year over year, 5% year over year, 3% year over year. That's still growth, despite the fact that this is like got to be goddamn near market saturation with billions of users across all of these numbers.
Yeah. I mean, this is Instagram's in that too, right? It's not just Facebook.
Yeah.
Right. Yeah.
That's when they talk about the family, family of
Right.
apps. It's all of theirs, including WhatsApp, Instagram, and now Threads, of course. This is the mention of the share repurchase, $3.7 billion, still $37 billion in authorized, sitting with $61 billion in cash on the balance sheet, and it pulled off a nice $13.6 billion in free cash flow this quarter. Yeah. The one kind of thing I wanted to highlight back here with the share repurchases is, the real question to me when I see share repurchases, it's a good way to use the money, but are they buying it at a price of where I would buy it? So we're going to talk about that a little bit here at the end. I'm going to give you my own kind of free cash flow yield based upon the most recent earnings. And this is part of the reason why that 7%, cost cutting, right? Their headcount was down 24% year over year. That's some serious fat trimmings went on there with employees, right?
I'm gonna make. I haven't seen this presentation. Is the bad news because they put a bunch of money towards virtual reality and they didn't like it or something?
No, no, that's
Okay.
not really the bad news. Yeah. So this is the major slide with the bad news. Okay. This is talking about 2024. This is all from the CFO here about looking forward to next year. Because to build out their AI infrastructure, they had to build a lot of server farms, invest a lot in capital expenditure.
Yep.
They're saying that their operating expenses are going to go up. They're going to have more depreciation going forward. They have more physical assets now. That just has to happen, right?
Yeah.
They are also saying that payroll is going to start increasing now. They're not going to, they did trim back, or like I said, 24% decrease in headcount. The headcount is going to start rising. Now, however, the people that they are hiring are going to be even more expensive employees. They're going to be hiring a lot more folks that are on like the actual tech stack, like production end of things. They're going to have fewer folks in like HR or other departments that, really ultimately are not accretive to like, new product development, but
Yeah,
they're
they're
going to
pointless.
be hiring a lot more engineers.
Yeah, I'll say it. HR sucks.
And the reality labs, they're saying operating losses to increase meaningfully year over year. They're going to keep on going. They have the Quest 3 coming out, and they did not talk about, I haven't seen an analysis. This would be kind of interesting, how much money are they ultimately losing on each Quest 3 headsets. But you're going to probably see a big number in terms of increasing losses in the reality lab segment. It's just
So
the
that's not a bad thing. Okay, so in terms of, are you familiar with Xbox?
yeah.
Okay. So like when like Xbox 360 came out, I don't remember the numbers, don't quote me, but they did not make money on the sale of the system in any way whatsoever, right? They make money on the back end of portion of games. You were paying for Xbox Live at that time, that kind of stuff. Now you pay for, you buy the new Xbox. There's no way they're making money on that for the stuff that's inside of it. I haven't checked this, but they make money on Game Pass, all this stuff. It doesn't matter. You're trying to get them
Yeah,
in the ecosystem. So
exactly.
the goal for the hardware is to break even would be fantastic.
Mhm.
Losing some is expected.
Yeah. Oh, I completely agree. It's going to be an even steeper loss. Is this why people are a little cautious about it? But I think that's a kind of point that's been out there for a while. No one's surprised by that. Now, this slide right here is going back to 2021. I was looking at the main highlight here I wanted to make was their operating margin, right? This is how efficiently the business is running in terms of, the dollars coming in the door, how many of them ultimately going down to like the balance sheet as operating profit. You saw that they kind of, I want to say, started off in the mid 30s up towards 40% here. They had a serious lull through 2022 that contracted all the way down to 20%. However, that number has picked back up with hitting 40% this quarter. That's 40 cents of every dollar that goes in the door at Meta that's coming out of the back end as profit. That's
Yeah,
insane.
it's disgusting.
Yeah. But that number's going to contract.
Jeez. Yeah,
All right.
but I mean, contract to what? Like 30? It's still great. I don't know.
Maybe. So I wanted to highlight on this slide here, that decrease in expenses by 7% year over year. Look at this; they've consistently cut across the board. They just getting rid of the fat. This is why you're seeing the operating margin so high, and that's the work in large part of Susan Lee executing Zuckerberg's vision of the year of efficiency, and they're going to continue going forward with that. This is something you're going to see, I think, across a lot of the major tech companies. Is they're being a lot more prudent with the dollars that's coming in the door, and not just like investing in everything under the sun, but they're still trying to deliver profits to shareholders. All
I
right.
mean, it seems like the best of both worlds. I will say, I really think the virtual reality thing is going to take off. Did you see him and Lex Friedman's
Uh,
like
Part of it.
faces in the?
Yeah.
It's
Oh yeah, yeah,
wildly
yeah.
good because it was
It
like
was.
cartoony like a year ago and it was crap, and now it looks like a real person. It's like holy
Yeah.
shit,
They're making good strides.
dude.
They're still investing pretty heavily here in research and development. It's come down slightly as a
They have
percentage
to,
of revenue,
yeah.
but they're still investing in it. All right. And they have the other product that came out this quarter where they're talking about the the glasses, the Ray-Ban collaboration glasses, and that you'll be able to live stream from those, which is kind of cool.
Yeah, that seems like an invasion of prime. I'm not a huge fan of that.
All right, fair enough. So one of the metrics I like to use to help me compare different investment opportunities is something called free cash flow yield here. All right. So this is my calculation for free cash flow yield for Metastock as of the date of this earnings. They had $61 billion in cash, $13.84 billion in debt, market cap 763. And then so that gives you an enterprise value of 720.79. They did $13.6 billion of free cash flow this quarter. If you annualize that out, which is above what they've done in the past, okay, I understand that. But that would still give you a 7.5% free cash flow yield. What do you think about that number? Is that like one that gets you excited, or?
Yeah, isn't Apple less than half that?
Yeah, yeah. So this is somewhere in between. Obviously, I think we all wish we had a time machine to go back and buy as much Metastock as we could last October. Fortunately, we had the positions we have. You know, when you get this number up over 10%, now I'm like super excited about something like that.
That's Baba.
Get down to 5, and I'm like, oh, it's probably a fair enough. That's kind of how I think about it. There are rare opportunities where you can go a little bit lower than that if you have something that's like has a great potential, but in this realm of between 5 to 10 is like where I think a good investment lies, at least in my personal kind of risk tolerance. But everyone's got a different methodology there.
So they're hanging out at 296, 70. We're gonna have a video later this week. I think that there may be a little bit of a crash coming, slightly.
Okay.
So if I could pick this up around like 230, I'd be very happy with that number. That would I would
Yeah.
I'd buy 100 shares for
All right.
230.
Yeah.
Honestly, it's good right now. Like if you compare it to other equivalent market caps and what they're making, it's really good.
Yeah.
Like,
And this is with them still investing heavily into what has potential as like a next generation technology. I definitely think people discount it a little bit in terms of looking at Reality Labs as the vision it is now and saying like whether or not this will exist. But as Zuckerberg talked about that Ray-Ban glasses and kind of ability to live stream there. Ultimately, that's the goal, is to get to a product like that also has this augmented reality kind of built into it, where you now have a kind of more seamless integration of your computing technology with your everyday life, which is Ready Player One status right there, man.
dude, if we can get that omnidirectional pad, I'll just play video game. That'd be the coolest thing ever. That'd be awesome.
I love it.
All right, guys.
All right, guys. Catch you next one.